For every single ounce of physical silver that's actually available for delivery in the COMEX vaults, there are 10 paper claims promising that exact same ounce. Now, that's not a prediction. That's just the mathematical reality of the market we're in right now. In a world that's built on promises, this is the number that really matters.
And that leads us to the big question, right? What happens when all the people holding those paper claims decide they want the actual physical metal? Well, we're going to break down exactly how we got to this point and what the source material suggests might be coming down the pike.
You know, this kind of documented shift is exactly the sort of thing we track here at Bullion Signal. Our whole mission is to help you find that one clear signal in all the noise of global finance. So if you want to stay ahead of these kinds of critical market shifts, make sure you're subscribed.
Okay, so it's really important to understand that none of this is happening in a vacuum. The stress we're seeing in the silver market, it's really just a symptom of a much larger issue. The entire global financial system is, well, it's navigating what you could only call a perfect storm, and that's making it incredibly vulnerable to shocks.
Think of the global economy as this massive ship. For years, it's been taking on water in the form of inflation, just slowly eroding the value of all our paper money. At the same time, it's overloaded with these unbelievable levels of government debt, which weakens everyone's faith in their promises. And now, on top of all that, the geopolitical currents are shifting violently, forcing nations to ask, who can we really trust anymore?
So the crucial point here is this. In this environment of just deep uncertainty, there's a global flight to safety. But it's not to the usual paper assets. We're seeing investors and even entire nations starting to search for real, tangible things in a vast sea of digital and paper promises. This tension right here is the stage where our whole story is unfolding. All right, that brings us to the first pillar of our analysis. A specific, documented policy change from the world's biggest player in the silver market. On January 1st, 2026, China basically changed all the rules of the game.
So this is the catalyst. According to their own official government announcements, China activated a new export policy that limits who can export silver to just 44 approved companies. And to even get on that list, you've got to produce at least 80 tons a year and get a stamp of approval from the government. This isn't just a tax or a tariff, it's a state-controlled chokehold on supply.
And the way they timed this, wow, it was strategically brilliant. On October 30th, all the headlines were celebrating this pause on rare earth restrictions. But on that very same day, China was quietly filing these new controls on silver. So they looked like they were giving in on one front, while behind the scenes they were locking down complete control over another, far more critical one. A masterful chess move, done while everyone was looking the other way.
The consequence here is direct and it's unavoidable. China now has state-level control over a huge chunk of the global physical silver supply. What this action tells us is they no longer see silver as just another commodity to be traded for a profit. No, it's now being treated as a strategic national asset, something that's essential for their own economic and military security. Supply chains, they're not about logistics anymore. They're about politics. Now, this control isn't just about what they're pulling out of the ground. The second pillar of this argument shows that China's real power comes from a critical choke point in the supply chain, one that affects almost every ounce of silver, no matter where it was originally mined. Let's take a look at the refining process. Just look at this. It really shows you the whole picture. China controls an estimated 65% of the world's refined silver supply. What that means is, even if silver is mined in Mexico or Peru, there's a really high chance it gets shipped to China to be refined before it ever makes its way into a Western vault or a factory. They control that crucial middle step. So, why? Why would they want this much control? Well, because their own domestic industries are just gobbling up silver at an incredible rate. They're the world leader in making solar panels, electric vehicles, and all kinds of electronics. And every single one of those industries is foundational to their economic future.
and every single one is completely dependent on a massive, secure supply of silver. And what this all boils down to is a stark new reality. The government's mandate is crystal clear. Feed our domestic industries first. Secure the raw materials we need for our national priorities. Any silver that might be left over for export to Western markets, that's now a secondary concern, if it's a concern at all. The supply hierarchy has been officially redrawn. So that makes you wonder, right? What happens to the solar, electronics, and EV manufacturers out here in the West who've built their entire business models on the idea of a steady supply from China? How do you think they'll react when they find out that tap has been turned off? I'm genuinely curious to read what you think about this down in the comments.
All right, let's move on to Pillar 3. While China was systematically locking down the physical supply chain, the Western financial system was busy building this ever larger skyscraper of paper promises right on top of it. So let's shift our focus from the physical market in the East to the paper derivatives market in the West, specifically the COMEX. So for anyone who's not familiar, the COMEX is the main futures exchange where the Western price of silver is discovered. It's where the big banks, hedge funds, and industrial companies trade contracts that promise to deliver a certain amount of silver at a future date for a set price. It really is the heart of the paper market. Now let's look at the physical reality that's supposed to be holding up that market. The COMEX has a category of silver called registered inventory. This is the actual physical metal, sitting in their vaults, ready to be delivered. Right now, that number is about 82 million ounces. Just remember that figure. It's the bedrock of physical reality for this entire market. Now, let's look at the other side of the ledger. The total open interest, which is the total number of outstanding futures contracts, represents a claim on 829 million ounces of silver. Just let those two numbers sink in for a second. 82 million ounces of actual deliverable metal and 829 million ounces worth of paper promising it. And there it is. That's the core of the problem. A 10-to-1 ratio of paper claims to physical metal. For every single bar of silver sitting in the vault ready to go, there are 10 different paper contracts floating around the market, and each one is promising that exact same bar. This is the kind of leverage that our modern pricing system is built. Now, to be fair, in a normal, functioning market, this system works just fine. Most traders don't want the headache of taking delivery of 5,000 ounces of silver. They're just speculating on price, so they roll their contracts over or they settle for cash. The whole system relies on the assumption that only a tiny, tiny fraction of people will ever actually ask for the real thing. But here's the thing, and the source material is very blunt about this. That fundamental assumption has been completely shattered. The system only works when you can always go out and find more metal to meet demand. But what happens when the world's largest refiner basically says, sorry, the metal is no longer for sale? Well, the entire foundation of the paper market starts to crack. And that dislocation, that growing chasm between the paper story and physical reality, that's exactly what our growing community here at Bullion Signal is laser focused on tracking. It's an absolutely fascinating and critical space to be watching right now. So the takeaway here is this. China's policy has created a direct threat to the integrity of the Western paper market. The COMEX's ability to just go out and source physical silver from the global market to back all of its paper promises, that ability has been fundamentally compromised. The backstop that everyone just assumed would always be there is quickly disappearing. And that leaves us with the ultimate cliffhanger, doesn't it? What happens when the industrial users, the big investors, or even sovereign funds realize the game is totally changed? What happens when they stop rolling their contracts over and they all start demanding delivery all at the same time? In part 2, we're going to explore the first signs of stress that are already emerging in the system and what could happen next.